Hi there, Serial Trader here. I just want to do an update on the overall U.S. markets here. It's been a while since I did one, but now I'm actually seeing something potentially interesting setting up. So I think there'll be a fairly significant selling opportunity soon here, potentially towards the end of this month or maybe sometime in January. You often see major pivots around the end of the year or beginning of a new year. And I only need to point to last year you saw a major bottom towards the end of December. And let's see, that was on December 26th. And then another significant pivot that comes to mind is the top you saw in January of 2018. And you had this very strong run up from 2017. And then you kind of had that blow off top into the first month of 18, and then you had a significant correction after that. But that's not the only reason I'm seeing something potentially interesting here. So that correction that we had off the highs of September 2018, that was definitely a three-wave correction looking back here. And I'm kind of leaning towards that being an initial A wave of a potentially larger, more complex correction. And since then, we've had this big move up. But if you examine the structure of that move up, it looks like we had an impulse wave up here into April of 19. I'm calling that wave A. And then a fairly irrefutable triangle pattern formed after that. So a nice A, B, C, D, E, which ended on October 3rd for a larger B wave triangle. And now it looks like we're near the later stages of an impulse wave up, 5 waves up for wave C to complete potentially this larger B wave that basically counteracts this larger A wave we had in the fourth quarter last year. And if that's indeed the correct interpretation, then if this is, since we have a potential B wave making a new price extreme, a new high, that could be the B wave of an expanded flat or a running flat, or it could be the B wave of a running triangle or even an expanding triangle. No way to know at this point, but it does indeed look like a three-wave move up to new highs. So a B wave of some sort later to be revealed by the market. So that implies some sort of significant move down in a C wave for perhaps a much larger degree fourth wave. But that's kind of getting ahead of ourselves. To me, there might just be a significant, well, maybe not the top, but a top of significance here that might present a nice selling opportunity if it presents, an attractive pattern, and I'll get to that later on. But if I do zoom in closer here on this daily chart, so from that low in October we had there, definitely a nice clear 5 waves forming here. And even within the 5th wave that I propose we're in, it looks like potentially, and I'll adjust this to green in a moment, potentially 5 within 5. Right? So certainly starting to look very mature. Now, no reason to believe the top is in yet, even though it is extended and overbought. But just the structure suggests it's very mature. It can always subdivide a little more than you think and go a little higher than you think it can. But this is certainly looking like the later stages of a significant impulse wave up. So I just want to pull those off so we're not too cluttered here. But if I go in even closer, some things I can do on this impulse wave up from October, we can do what's called the Elliott final channel. And that's where you connect the extreme of wave 2 with the extreme of wave 4 in parallel off of the extreme of wave 3. And that gives you a potential channel trend line that you may react off of in wave 5. So we're right up in that area at the top of the channel here for the Elliott channel. And we are overbought on the daily RSI. We're overbought on the 4-hour RSI. We're overbought on the hourly RSI. And we're overbought on the weekly RSI. Okay? So there's every reason here to at least have some sort of pullback. And I won't make any predictions as to what kind of pullback or the severity, but I do think a tradable top of some sort is approaching here. Potentially a significant one. Now, there's no reason to sell it today and try and pick the top. But what I would like to see, if we say go in here on the hourly chart, and also I'll point out we do have multiple gaps that have gone unfilled here, and eventually, even way down here in the 2900s, eventually pretty much every gap on the indexes gets filled. It's just a question of when, not so much if. So when we do finally get our top, which I think is approaching fairly soon, there are many, many gaps to the downside that need to be filled. So that just gives you an idea of, you know, we could get easily a 200-point plus move down. It could be more than that, depending on what happens. So that's a nice move that I think might be worth trying to capture here. But again, what I'd really want to see, so we've got all these multiple gap ups. What I'd like to see is some sort of decisive, impulsive 5-wave structure to the downside. And I would then like to see, as opposed to try and just pick, oh, where is it going to stop, where is it going to stop, a nice clear 5-wave move down to the downside. Then a clear 3-wave move up, potentially a nice deep retracement, offering a good risk-reward setup, you know, with a really reasonably tight stop. And I will be looking to sell some ES futures here if and when this setup presents itself. And that's basically your entry point. Get a nice clean 5 down, deep retracement in a 3 waves up, and then make your move, have a clearly defined tight stop, and then potentially get a nice impulse wave down after your entry. So that's what I'm looking for. It's not there yet, but it is approaching, I think, fairly soon. Oh, another relationship I thought I'd mention is some fib relationships. So zooming out here a bit. So in an A triangle BC move, a common relationship of the C wave is to be a 618 multiple of that initial A wave projected off of the B wave low. Well, that comes into play right away here. If you can see what I'm getting, 618 of A off of B. That comes into play at 32.31, and we've gotten very close to that already. We've gotten to 32.25 as of Friday's high. So that's an interesting fib relationship that's basically right where we are currently, or very close. And what else do we got here? Given that we have this fairly clean and clear impulse wave in development, there's some other relationships to be examined as well. And that's where you have the distance traveled in waves 1 through 3, so this entire distance, projected off of wave 4 to give you a 5th wave relationship to that. So the 618 and equality relationship of that. So the 618 of that gets you to 32.54, and equality will get you to 33.68, although that seems a little extreme, but you never know. Sometimes an extreme top can overshoot a little bit, so that wouldn't be out of line. But I do like this area we're kind of coming into here, near the top of this Elliott channel, kind of in the mid-32s. That's an area of interest. If you do see a nice signal, a nice little impulse down and retrace up to a lower high, that's going to offer a nice trade setup, in my opinion. But still patiently waiting. And remember, towards the end of the year here, it's going to be holiday trading week, shortened week, lower volumes, typically a bullish bias, although that doesn't mean anything necessarily, but more often than not, you'll see a kind of a slow drift up in that time. I'm thinking maybe early January, mid-January, you see the real pivot form. But we'll have to just wait and see, let the market reveal itself. Okay. And then, of course, we, just some more basic relationships. The reverse fib of the most recent correction. So that little fourth wave correction, if we do our 1.382 and 2.0 fib relationships, what do we get to here? We've already exceeded the 1.382. That was at 31.86. The 2.0 gets us at 32.38. So again, nice kind of cluster forming here in the mid 32s, various fib relationships. Okay. I think that's basically all I wanted to go through here for the time being, at least for the Elliott wave picture here on SPX. Definitely kind of jumps out at me now on this chart. I've just been waiting and watching, but now I think there's enough structure here to try and anticipate some sort of selling opportunity. Okay, so we'll switch to the Thinkorswim candlestick chart and just go through that. So you can see, yeah, all moving averages are pointing up. We're in the overbought condition here on the oscillator. Multiple gap ups, including a gap up we just did there on Friday. Potentially a little doji candle here on Friday, although it doesn't mean anything yet. Let's see here. Weekly chart. Anything here really? Oh yes, I think I will point out there is a tiny gap here on the weekly chart, and it's rare to see a gap on the weekly chart. And of course, not only do daily gaps get filled almost with certainty, weekly gaps certainly do as well on the major indexes. So here we have the high of last week at 3182.68. The low of this week was at 3183.63. So there's that, let's call it a 1 point gap or so on the weekly that will at some point get filled. And even that is, that's like 40 points away on SPX just to fill that weekly gap. So keep that in mind. But as far as the candlestick goes, this is not a reversal candle, certainly on the weekly. On the daily, maybe Friday's, candle was a little bit of a reversal candle, but again, pretty weak, no confirmation at this point. So nothing jumping out here on this candlestick chart as of yet. But we're waiting and watching. Okay, now the Dow Jones Industrial Average. A little bit more of a rejection candle there on Friday for the Dow. You see we gapped up, still a gap up, but taking back quite a bit of those gains and closing near the low of the day. So potentially a little bit more of a signal here of at least a short-term top here on the Dow. Obviously overbought on the oscillator. But again, still some confirmation needed. I mean, really, we've got to get below the T-line and start using the T-line as resistance as opposed to support to really, sink your teeth into the fact that, if any kind of pullback occurring, and it's just not there yet. So weekly chart on the Dow. It's certainly not a weekly reversal candle. A little bit of an upper shadow there, but relatively healthy weekly candlestick. Certainly nothing there yet. Okay, well that's the Dow. And we'll go to the Nasdaq. And the Nasdaq looks like it had the strongest close there on Friday. Closed near the high of the day. A gap up there as well. And again, multiple gap ups to the downside that at some point need to be filled. Weekly picture here. So that's a pretty strong looking candlestick on the weekly for the Nasdaq, closed near the high of the week. And again, a little weekly gap that at some point needs to get filled. So no obvious signs of a reversal here, certainly on the candlesticks. Okay, now on the VIX. On the VIX, we're just kind of near the low of the range, although not making new lows, despite the indexes making new highs. So that's a bit of a divergence developing. And you see on the VIX, obviously it's a range-bound thing. we're near the low of the range. So at some point, we're going to move up towards the higher end of the range. But until we do, you might just want to at least hedge, if you have any longs, hedge some longs with some cheap VIX calls, maybe a month or two out. Not a terrible idea. But yeah, the VIX not providing any reversal signals itself as of yet. So not much going on there. And, oh yeah, so I'll go through the VIX VVIX tool. Okay, so what I am seeing here on the VIX VVIX tool, so VIX and VVIX tried to get a little uptrend going. It's tentatively still intact. We haven't made new lows in VIX or VVIX, despite making new highs in SPX. So that's not so much a divergence between VIX and VVIX, but a divergence between VVIX and VIX from SPX. And at significant pivots, you often see that where volatility stops making new lows, the index continues to make new highs for a while, and then finally the index starts rolling over, and then VIX and VVIX really start trending up simultaneously. But not a clear sell signal yet. You'd have to see SPX start getting below its blue moving average here, which currently is around 3,200. So not that far away. But not a clear sell signal yet. Again, I think we could still drift a little higher as far as SPX goes towards the end of the year, early January. And then we'll have to see. But I like to keep my eye on things, anticipate them before they're actually starting to happen so that you're not surprised, so you have a plan in place and you can react accordingly. But I guess, yeah, final remarks. If you are long, I would certainly be tightening up your stops or scaling out of a winning long position, because I do think a fairly substantial pullback is in the cards here pretty soon. And I'll leave it at that. Hopefully everyone enjoys the holiday season. And I won't continue to regularly cover the major indices as I haven't been for a while. But when I do see potential setup forming, or if I am involved in a trade myself, I'll certainly give it more coverage. So if I do end up putting on some sort of bearish trade here in the next couple weeks, say, or a few weeks, I'll certainly give it more coverage if and when I do that. All right, that's good for now. Serial Trader signing off.